So dear students, here I am back again with another video discussing about accounting concepts 2. Yesterday I have discussed something and today I am discussing the other aspects, other accounting concept. Then here we have number 1, dual aspects concept. Okay, this is also known as duality. What this concept says? This concept says that every debit, so we get it here that every debit there is a corresponding credit. See, debit has a corresponding credit. You know, all the transactions have two aspects again here. This one is giving aspect, okay, and this one is receiving aspect. Okay, now receiving aspect is debit and giving one is credit. Yes, it is debited because the account gets the receive the benefits. That's why it is debited. Credited because it gives the benefit. Clear? Then the most important aspect of this transaction, of dual aspect transaction, the most important is that it helps as a basis of recording. It helps as a basis of recording transactions. Okay, transaction where? In both debit and credit. Another important aspect is that it shows total assets equal to total liabilities. Clear? This is also can be said as a basis of double entry system. The second concept we have is the cost concept. What is cost concept? It is monetary price paid oblique to be paid for acquiring an asset oblique service. Under cost concept, an asset is to be recorded at total cost of the asset paid or to be paid. Most important point here is paid and to be paid. Clear? Again, in cost concept, transactions to be recorded at cost, not at any other value. Okay, no other value. Most important aspect of this concept is that it again is a basis of recording transaction. Okay, another most important aspect is it ignores the other values. Yes, when it ignores other value, what happens? It provides objective, reliable and understandable financial information. Okay, this is about cost concept. So the next concept what we are going to discuss is another important one known as revenue recognition. Okay, now revenue recognition, what does revenue mean? Revenue means the sale of goods or rendering services. Yes, rendering services by an enterprise, okay, to its customers. This is the meaning of revenue. Now what is the meaning of recognition? Recognition refers to the point, okay, to the point of time where a revenue is assumed to be realized. Okay, and example is, you know, one beautiful example. The beautiful example is when goods are sold in cash, comma, revenue is generated immediately. Clear? Okay, another important concept, okay, another important concept is matching concept. The name at least can give you an idea. Matching means matching two items, that is matching revenue with expenditure. This concept says that revenue should be matched with expenditure. Okay, revenue and expenditure are determined and compared in order to ascertain the net profit or net loss during the period. Is it clear? So what we discussed today, we discussed accounting concept. First of all, we discussed about dual aspect concept, okay, where transactions are recorded in 2 points of view. One is debit, another is credit. Debit, who gets or receives the benefit; credit, who gives the benefit. Okay, and the basis of recording transaction is always debit and credit. The second we discuss is about the cost concept. Cost concept means everything, whatever transaction is there must be recorded. Any asset or whatever the transaction is should be recorded in the price of, in the form of concept or in the form of cost. Okay, cost concept. Okay, the asset to be recorded in total cost, to be paid or to be paid, and transaction not in other value, only in the form of cost. Okay, third we discuss about this one, revenue recognition, where the sale of goods or rendering services by and customer is known as revenue, and recognition at the point of time when revenue is realized, it is known as recognition. Example is when goods are sold in cash, revenue is generated immediately. And the fourth concept we have discussed today is the matching concept. What is matching concept? There must be a difference between revenue and expenditure. Means whenever we have to match always revenue and expenditure at a point of time to ascertain the net profit and net loss during the period. Is it clear? Thank you. Kindly subscribe my channel. Tomorrow I'll be back with another video.